Hello guys, welcome back to the First Dollar Investor. Today we're taking a deep dive into ARKI, the ARK Innovation UCITS ETF. Basically, the European version of Cathie Wood's famous ARKK fund. If you've ever wondered, what exactly does ARKI invest in? Is it too risky? How does it compare to ARKK? And should beginners even consider this ETF? This video will break everything down in simple, clear detail. I also own ARKI myself. It's about 5.9% of my portfolio, so I'll explain exactly why I bought it and how I use it alongside my core ETFs. So, what actually is ARKI? ARKI is an actively managed ETF focused entirely on disruptive innovation. Instead of following an index like the S&P 500 or the MSCI World, ARKI's managers choose individual companies they believe are creating the future. Their main themes include AI, robotics, genomics and DNA technology, fintech and digital payments, next generation computing, autonomous vehicles and cloud infrastructure. So, this isn't a normal tech ETF. It's a high conviction, high risk, high potential ETF that's designed to invest in the biggest future growth drivers. It's managed by ARK Invest Europe, which follows the same philosophy as Cathie Wood's US team, but with important differences we'll get to later. So, what is the actual difference between the two? ARKK is the original US fund. ARKI is the UCITS version, built specifically for the UK and Europe. Here are the differences that beginners need to know. Number 1. Holdings are similar but not identical. UCITS rules prevent extreme concentration. ARKK can put 10% in one stock. ARKI usually can't. This does mean though, ARKI is slightly more diversified. Number 2. It's regulated differently. ARKI must follow European diversification and liquidity rules. ARKK doesn't. Number 3. Performance is different. Because weightings and holdings differ slightly, ARKI doesn't always move exactly like ARKK does. Number 4. Currency exposure. ARKI trades in USD but is regulated in Europe. Your GBP buying power will fluctuate depending on the exchange rate. Number 5. ARKK is not available for UK retail investors. ARKI is. So, ARKI is the closest legal alternative to ARKK for anyone in the UK. So what is the actual investment strategy of ARKI? ARKI uses a research-driven, high-conviction approach. Instead of spreading money across hundreds of companies, ARKI usually only holds around 30 to 40 stocks. Here's what ARK Invest looks for: disruptive potential, high growth rates, emerging technologies, future impact over present stability, and willingness to take big swings. This is very different from the passive ETFs you normally would hold, such as FTWG or the USA. So, what are ARKI's top holdings? They usually change, but generally include companies such as Tesla. Tesla isn't just an EV company in ARK's eyes. They invest in Tesla because it has one of the largest real-world driving datasets. It's pushing autonomous driving hardest. It's expanding into robotics with projects like Optimus, and their manufacturing is heavily AI driven. Number 2. Roku. Roku might seem random, but ARK sees it as the leading platform for digital TV and streaming advertising. Their thesis is, more households are cutting cable, streaming platforms will dominate ad spending. Roku owns one of the most valuable datasets for viewer behavior, and advertising margins are huge. Number 3. Zoom Video. Zoom is no longer just a lockdown stock. ARK invests because remote work continues to grow, Enterprise communication tools have huge long-term potential, and Zoom is expanding into AI-powered productivity and collaboration. Number 4. Block, formerly called Square. Block gives ARKI exposure to fintech innovation, small business payments, Cash App, Bitcoin integration, and digital finance services. Number 5. Genomic companies such as CRISPR, Pacific Biosciences. This is where ARKI becomes very different from normal tech ETFs. Genomics is the idea of editing genes to cure diseases. It's one of ARK's biggest bets. ARK believes genomic medicine could be one of the most important technologies of the next decade. These companies are extremely early stage, but the upside is enormous if the technology succeeds. So, the sector exposure. ARKI is not diversified like a world ETF. Its typical exposure looks like this. Tech, AI and software have a large majority. Healthcare and genomics have a significant slice. And then the rest is between consumer innovation, fintech and industrial automation. This creates high concentration risk but also higher potential upside. So, what is the performance history? ARKI's performance is extremely volatile. During tech and AI booms, ARKI can surge faster than the market, sometimes 20 to 40% in a short period, but during market sell-offs such as the one that happened in November, it often drops a lot harder. Compared to benchmarks, the Nasdaq 100 has outperformed ARK funds long term. ARKI sometimes outperforms in short explosive windows, but ARKI also underperforms during high interest rate environments. Genomic and early stage innovation sectors are still recovering from the 2021 to 2022 drawdowns. The key thing to remember here is ARKI moves in cycles, huge run up during innovation hype and big drops during fear. So what are the volatility and risks of this? ARKI is one of the highest volatility ETFs available to UK investors. Risks include high drawdowns, concentrated holdings, early stage companies, active management risk, and interest rate sensitivity. This doesn't make ARK bad, it just means you should treat it like a satellite ETF, not a core foundation of your portfolio. So, what are the fees? ARKI has an ongoing charge of about 0.75%. This is much higher than passive ETFs, but you're paying for research, active trading, and high conviction stock selection. Whether that fee is worth it depends on your belief in ARK's long-term vision. So, who is ARKI suitable for? ARKI is ideal for investors who believe in long-term innovation, people with at least a 5 to 10 year time horizon, those who are comfortable with heavy volatility, anyone wanting AI exposure without picking stocks, and people who already have a strong core portfolio. ARKI is not ideal for beginners wanting stable returns, people who panic in downturns, short-term traders, and anyone who doesn't understand the volatility. I personally hold £235 of ARKI, which is around 5.9% of my £4,007 portfolio. That's enough to benefit from AI and innovation growth, but small enough that if ARKI crashes, it doesn't destroy my entire portfolio. As an 18-year-old investor, I'm thinking long term. I like the idea of having a small speculative slice invested in future technologies, while keeping the majority in diversified ETFs such as FTWG and EQQQ. So, is ARKI worth investing in? If you want simple, stable, long-term growth, stick with broad ETFs. If you want exposure to cutting-edge innovation, AI, robotics and genomics, and you understand the risk, then ARKI can be a really interesting satellite ETF. Let me know in the comments whether you prefer ARKI's active approach or passive tech ETFs like the Nasdaq 100.